The Australian dollar started the week strongly, but then fell more than a cent to trade below 74 cents for the first time since January. The main driver seems to be commodity prices. Chinese iron ore futures prices fell 11% in just 3 days. Copper prices fell to their lowest level since January, and oil prices fell to lows last seen in November. So the Australian dollar is not alone in falling this week during this commodity turmoil, with the Canadian dollar hitting its lowest levels against the US dollar since February 2016. A lot of the focus is on China's economy. The April surveys on manufacturing and services sentiment indicated a slowdown in activity in the month. There's also been a clampdown by Chinese regulators on speculation in commodity markets. In terms of the official estimates of Australia's export revenues, however, the news is still pretty good. March exports were estimated to have risen 2.4%, led by iron ore, gold, and agricultural goods. There was a steep jump in imports, however, so that meant that the trade surplus of $3.1 billion was below our expectations. The RBA statement was a brief positive for the Aussie dollar this week, with the bank noting the improvement in the job market in March and also maintaining its optimistic growth forecast for 2017 and 2018. Markets are pricing only a very small risk of another rate cut in 2017, and that swings to a small probability of a rate hike by early 2018. This sort of outlook is likely to limit the downside for the Aussie dollar near term. In the week ahead, the focus in US markets will be on commentary from Fed officials following this week's FOMC meeting. The FOMC kept the Fed funds rate steady at 0.75 to 1%, but it did sound very optimistic about the outlook on the economy, downplaying the weakness in first quarter GDP. This has reinforced expectations that the Fed will hike rates again in June as Westpac forecasts. That's now 80% priced into the market. If the Fed officials do sound as optimistic as we expect in the week ahead, then that should support the US dollar. That will help keep a lid on Aussie dollar rallies. Australia's calendar in the week ahead features data on March retail sales and building approvals, along with April business sentiment. But the main focus, of course, for markets will be Tuesday's budget. Here we are likely to see ongoing deficits, but a focus on infrastructure spending. The Australian dollar typically doesn't react to the budget at all. However, this year there may be a little bit of nervousness over whether ratings agencies lower Australia's AAA rating. Overall, nervous commodity markets and a firmer US dollar supported by the optimistic Federal Reserve are likely to see the Aussie trade a little bit lower. We expect the Aussie to trade mostly in a range of 73 to 75 cents. We'll speak to you next week.